And welcome back to Fast Money. It is time for our chart of the week. And this week, the more, the merrier. It's not just one chart that Dan brought us. It's four.
Well, listen, Brian, we're telling a story here. And, I know a picture tells 1,000 words, but let's go with 1,000 charts. Let's go with 1,000 charts. All right, here's the deal. So let's start with this S&P 500. It's up nearly 30% of the year, just a few trading days left here. I think what's really interesting, look at that chart right there in late October. It broke out of that range it had been, and it's up about 7.5%, which obviously is a whole heck of a lot in a very short period of time. In that time period, have we had some kind of headwinds kind of removed? Obviously, the trade stuff has moderated a little bit. We know the Fed's still accommodative. That's kind of where I want to go next here. So this next chart is really interesting, and this is a hat tip to my friend Peter Bookvar, obviously a contributor of CNBC. This is the Fed balance sheet here. If you look at that, obviously it had been coming down, but at some point earlier this year, it started expanding. And Peter mentions that over the last 4 months, it's basically grown about $100 billion. So 400 total off that bottom here. And it's hard to kind of put those two together and not see that, as Peter mentioned in his note this morning, that is not benefiting stocks. That is that balance sheet overlaid with the S&P 500 over the last 6 months here. Now, that's important to remember. Like I said, the trade stuff is out of the way in the near term. The Fed is still accommodative, obviously, and some other things I think shape up pretty decently for stocks, especially with the calendar in the new year. But then let's go to the next chart here. And I think this is really important because when you think about this right here, this is really valuations here. And why are stocks going up? I know Gina's got a lot to say here, but at the start of 2019, the consensus for S&P earnings was up at 173, 174 bucks. And now where does it stand right now? 163 bucks. Where was the PE multiple for the S&P at the start of this year? It was about 14. Where is it right now? It's pushing on 20 right now. So when you think of the confluence of all these events here, it's hard to say that the accommodative Fed in a year where earnings for the S&P are not growing from the start of this year is not having a big impact here. So as we head into 2020, I think it's really important to kind of get a sense of where you think rates are going, where you think the Fed is going with their balance sheet, and where you think S&P earnings are going, because with the S&P up 30% right now, I would say that it's discounting a lot of good news into 2020.
That's absolutely right. That is basically the Fed pouring the champagne, right? And everyone's drinking it.